The ongoing conversation around tariffs and their impact on our daily lives, whether we're buying a home, a vehicle, dining out, or even getting a haircut, it seems that every conversation touches on the implications of tariffs, and the pressing question is, how will these changes affect mortgage rates? Hi, my name is Rasha Ingratta. I am a level 2 mortgage agent here in Windsor, Ontario since 1999. For those who own a home, or are considering purchasing one, securing a financing through a mortgage is an important process, to some the largest liability a person or family can acquire in a lifetime. As tariffs impact the economy, I believe clients will increasingly seek real-time expert advice from professionals like myself to understand how their mortgage options may be influenced. The U.S. economy is feeling the strain of tariffs, leading to inflationary pressures that increase the cost of goods and services. This volatility can ripple into Canada as our economy is closely tied to that of the US. While the Canadian government collects taxes from these tariffs, how those funds are utilized in Canada remains a key question. In the short term, the US may face challenges in growing its economy, which would lead to lower interest rates in Canada. Market experts anticipate rate drops to a low 3% range in the coming year, although history suggests they will eventually rise again. With the upcoming election, they expect the Bank of Canada to implement strategies to bolster economic confidence, potentially including rate reductions. The current environment is marked by uncertainty and volatility. In Canada, interest rates have been declining. Although the US has experienced slower movement, this situation significantly impacts consumer sentiment. Tariffs acting as a tax on consumers can lead to rising inflation, negatively affecting our economy. As we navigate these challenges, it's important to remember our resilience as Canadians. The government often steps in with programs to support individuals and businesses during tough times. We've recently seen an uptick in economic activity due to temporary relief measures like the recent GST-HST strategy, but tariffs are likely to exert upward pressure on inflation and potentially increase unemployment in the months ahead. Amidst all this, many clients are asking whether it's a good time to buy. When we look at numbers, a home that sold for $700,000 in 2021 at 2% interest rate is now priced at $600,000. Even with higher current rates around 3.89%, the reduced home price means lower down payment requirements, lesser insurance premiums, land transfer tax, and lower monthly payments overall. So is it a good time to buy? Yes, I believe it is. While we may face ongoing uncertainty and economic challenges, history shows that markets tend to rebound. Investors often look to buying during low periods, and as we've seen from the 1980s to today, home prices have generally trended upward despite occasional dips. As we continue to process the influx of information surrounding tariffs and their effects, our office stays focused on providing our clients with the clarity and guidance they need to make informed decisions. If you're coming up for renewal or in the market of a real estate purchase, it is crucial to review your mortgage details and see what best fits your needs or investment strategy. Myself or one of my senior mortgage advisors will be happy to assist you. We can be reached at 519-250-4848, admin@shopmortgages.ca, or simply scan the QR code and it will take you to our contact page. Once again, it's Rasha Ingratta, and have a wonderful day.